It's only going to happen once in your life. This is it. You will never get a better chance, actually, to get a leg up in the world than to be early to the world's first digital monetary network. And you're going to miss this opportunity because you're worrying and freaking out over all these third order, fourth order, fifth order hypothetical, FUD concerns.
Now, I want to talk about the threats to Bitcoin, we were doing a SWOT analysis, the strengths, the weaknesses, and so forth. So the threats that are out there, people have written off Bitcoin thousands of times, but it's still around. What do you think about the Tether situation, as well as quantum computing, and if there's some very strict regulations maybe coming from the United States, which is the largest capital economy or market, if you want to call it that?
It's only going to happen once in your life. This is it. Michael Saylor speaks on the opportunity of being early to Bitcoin, as well as what the biggest threats to Bitcoin would be, and then breaks them down one by one. Tether, central banks making their own cryptocurrency, quantum computing, and regulatory action against Bitcoin. Make sure to stick around to the end of the video where I break down with data and analytics the various threats that Bitcoin faces, as well as where the Bitcoin price is likely to go from here. Also, the Bitcoin price at the time of recording has just blasted through $55,000, so congratulations to all Bitcoin holders. To watch the full 1 hour 30 interview, check out the first link in the description, a great podcast ran by Thinking Crypto. And to address the cyborg Saylor in the thumbnail, all the big figures in the Bitcoin and cryptocurrency space have changed their profile pictures to one with lens flares or robots as eyes as a sign of solidarity and support for Bitcoin as it blasts through $55,000 and a $1 trillion market cap. As you can see, Raoul Pal was one of the few that didn't join in. Also, only a tiny percentage of people who watch my videos are actually subscribed. If you enjoy the video, consider subscribing, dropping a like. It's free and you can always change your mind. Enjoy the video.
There's definitely a lot of FUD in this industry. I've never seen so much FUD. I don't know. I don't know why. Like, for example, like people that buy $1 billion of Apple stock don't sit around saying, is Tether manipulating Apple stock price, or is the quantum computer going to destroy the Apple network? There's a lot of people in the crypto industry, I think, that are very creative that are coming up with these things. With regard to Tether, it's completely irrelevant. I can't even imagine why anybody would take it seriously. The people that are buying Bitcoin are wiring hundreds of millions of dollars of cash into an exchange, and they're buying Bitcoin. 500 million of money goes to some place, they buy 500 million of Bitcoin. That's what's going on. There are some people that wire 200, some money into Tether, and they use Tether instead of cash because they want to move it between Singapore or Malta or some offshore exchange. But it's really third order. And what does it matter that someone uses Tether, right? I guess the theory is something like someone's created an extra $20 billion of Tether and bought Bitcoin with it and it's not backed. But that means that they're short the Tether, and if someone ever calls it back, they're going to come up with $20 billion and they're totally out of luck. I don't believe that for a heartbeat. I think that that's silly. So I thought, I got some email and it just felt like it was a scammer. I feel like all the Tether FUD is like some kind of scammer distributing something. But there's no legitimate institutional buyer would even consider that. And I don't think they're even using Tether, right? In the US, they're not even using Tether to buy Bitcoin. And most of the demand for Bitcoin is coming from the US. It's just US dollars getting wired into exchanges to buy. What if central banks created digital currency? Well, the answer is that doesn't matter either. People aren't buying Bitcoin in lieu of central bank currency. They're not buying Bitcoin in lieu of Tether. And there's not any genie behind the wall that can conjure up $100 billion of Tether and buy Bitcoin and not pay it back. It just doesn't work that way.
Yeah.
Again, that's the same thing. The only people that pitch that are other altcoiners that want to somehow say that they're more quantum resistant
Sure.
You think anybody that owns Amazon stock is dumping the stock because of quantum fears? You think anybody owning Google you think Sergey Brin is concerned about his Google stock because of quantum computers? I never met anybody on the planet outside of people in the altcoin space that talk about quantum attacks, and they talk about it all the time. And my conclusion is they're just desperately grasping at straws, looking for some way to criticize Bitcoin because they think that they've got a better quantum algorithm. But I think it's if someone invented a quantum computer, 99.99% of all the stuff on Earth is not in Bitcoin.
Yeah.
And it's all subject to quantum attack. I could pretty much create World War III and end Earth and life as you know it on the planet and take away anything from anybody if I have the mythical, all-powerful quantum computer.
Yeah.
Right? And first thing you're going to attack is probably like, wouldn't you just steal like $100 trillion worth of bonds and sovereign debt? Why would you bother to go after the stuff in Bitcoin if you really had the all-powerful computer? So it's kind of a silly thought experiment, but you really think a malefactor is going to get their own quantum computer, no one's going to find out, and that no one's going to do anything about it? I really feel like it's dudes in their garage that are making stuff up to try to sell, the 6,437th crypto project and get funding for it. And so, no, I think that's just as silly as the Tether FUD. I think they're both just random FUD from altcoin projects.
And by the way,
just want to jump in here on this point of the threat of quantum computers and how the invention of one could deconstruct the Bitcoin process. This point is of significance to me as when our small business was meeting to look at putting Bitcoin on our balance sheet, believe it or not, this was one of the main reservations that came up. After a lot of research into it, let me re-emphasize that if quantum computing was to happen, Bitcoin would be the least of our worries.
The real point is life on Earth as we know it would be threatened by the all-powerful mythical malefactor with a quantum computer. And the first thing they're going to attack is not going to be Bitcoin, right? But I just don't, Dr. Evil is not getting a quantum computer. And if Dr. Evil gets it, then, your Bitcoin's going to be the least of your worries. Well, it's just, there are better things to focus your time on. It's just a very creative way to get distracted, and it'll probably cost you a lot of money because you have the world's first thermodynamically sound monetary network. There's no reason why it shouldn't go up by a factor of 100, and you're not going to invest in it or take advantage of it because of your fear that 1,000 whatever years from now, or 100 or 20 or 10, Dr. Evil will get a quantum computer. So I would respond with the classic Bitcoiner response: have fun staying poor. I think that over the next decade, the most logical challenge for people in the Bitcoin community is just regulatory FUD. You'll just see fear, uncertainty, and doubt about, well, what if a regulator does something that's bad? I don't know what it is, but what if they do it? Just like, what if Dr. Evil invents a quantum computer? They're just I'm speculating that something might happen. I don't know what it is, but what if something that I don't know will be really bad that will cause a problem? And that's why we should do nothing, or that's why you should give me money to invest in the 6,437th different project. And I think the answer is the regulators will regulate it. The IRS will make you pay tax on it. They have. It's property. You pay property tax. If you want to use it as currency, you can't, because there's a capital gain tax when you transfer it. So it is regulated. The OCC will have an opinion. The SEC will have an opinion. The Treasury will have an opinion. There are KYC regulations. Like, for example, it might take you 4 weeks to get an account with a regulated exchange. There'll be AML regulations. I think there'll be regulations everywhere in the world, but the writing is on the wall. It's most likely that what we're going to see is it can be regulated as property. And that means that if you had $100,000 of cash in the bank and you wanted to wire it to a random phone number without saying or knowing who it is, probably the bank would balk.